Let's welcome in our first guest on the show. Niteen from Aurum Capital is now with us. Niteen, thanks for taking out time for us. Could you just first start by your view on the markets, the recent rally? It was all about, as your Twitter handle says, buying into pessimism that was needed at 15,100.
Yeah, thank you, Pankaj, for having me on the show. Absolutely. So a couple of months ago, not couple of months, actually, a couple of weeks ago, just 2 months ago, there was a lot of pessimism built in the market when there was a consistent selling coming in from FIIs. And the market was available at a pretty good valuations. There were many stocks which got corrected significantly. It provided a right opportunity for value investors who are looking to build the portfolios from the long-term perspective. And that was a time to invest, absolutely. And it has given pretty good, pretty decent returns in last couple of weeks.
Right. Say if you would have done this interview in June somewhere, you would have said that yes, FII selling is at its peak. They are selling so much. They have sold more than GFC. They have sold with various other parameters. And, any other statistics that you could have given us that has been analyzed. What do you make of this last 20-day number in terms of a buy number? You think it's an all-out buy number, or it's a number which you believe would be a consistent buy number and every decline should now be bought into?
Absolutely. So, see, with stocks moving up, the sensex, nifty moving up, there is an element of risk which has come. But also, let's understand that there are certain other parameters which got corrected. The inflation is now, it has seen most likely its peak. There are many commodity prices which have corrected. Crude has fallen, as you mentioned a while ago. It's at around 92, 93 now. And it has it has further chance to come down further. So when inflation is in check, commodity prices are coming down. It has likely to give further flip to the earnings of the companies, which are doing well in terms of productions or sales, both domestically and from the export perspective. So if that is happening, if your numbers are coming in the right direction and the input raw material prices are in check, the company's profitability will remain bullish, and that's going to give healthy returns over a period of time. But we can't expect the similar kind of returns which have happened in last couple of weeks. We'll have to curtail our return expectations. There can be reduction in terms of the returns which are coming in the subsequent period, because we already have seen a significant amount of rally during last couple of weeks.
When we just talk about how things are moving as far as the entire pack is concerned, do you believe that, the newly listed e-commerce companies, they have seen a decent correction? Would you be a buyer into them? Or would you go with the traditional free cash flow companies and where dividend visibility is high?
Pankaj, we are basically value investors. So we look for cash flow. Cash is king for us. No doubt that newly listed fintech companies or other companies may provide an opportunity, but there is an element of risk as well over there. If they are doing well in terms of revenue numbers, that is not sufficient, because you need to generate cash flow, you need to generate the profit over a period of time. That may come in a later period of time, but at this point of time, it's not there. So we would like to avoid, even if we are having a background in IT, both me and my partner both have the background in IT, but still would like to avoid going into or fishing into newly listed tech companies.
So you said that you're a value investor. Where do you see value into this market? Which sectors, if you cannot talk about stocks? And how would you look at dividend yield as a component with interest rates going up? How important does that become now for a lot of companies?
Wonderful. So there are multiple sectors we are bullish on. I mentioned previously also some of the stocks from the sectors have gone up. We may or may not be buying, but some of the sectors are interesting, including capital goods, telecom, real estate, financials, both private as well as public sector banks. Education or book publishing is another sector that we have recently entered into. Power, pharma, cement. So some of these sectors are pretty interesting. There is a demand over there. The companies are doing quite well. and there is a demand coming in after a pretty long time in some of these sectors. So we should look at it from little longer term perspective and continue to hold them.
Right. When we talk about the manufacturing business and the export business, how would you look at it? Now, we have a lot of investors who are saying that one should play the domestic theme here in India. A lot of people say that one should look at export theme in India in terms of manufacturing. Which is the sector, which you would go with?
See, we have both actually, domestic as well as export. Wherever there is an opportunity, we would like to go for those sectors. So capital goods sector, especially, say for example, wherein the sector has done both domestically well as well as from the export perspective. So wherever there is a consistency in earning and consistency in demand building up, we should look out for that. But if the export is there, we would like to prefer that out of this two. If I have both the stocks in front of me, one is export, the second one is domestic, I would like to go for export oriented companies, because if there is a demand in domestic, he would be able to serve. But if he has already been into the export market, it would give him a lot of stability in terms of operations and in terms of earnings.
In terms of traditional names like the large IT names, the likes of Infosys, TCS, HCL, Tech-M, tried and proven record, free cash flow strong. They're facing some issues of attrition, maybe a little bit of order booking as well. US recession, what happens over there? How would you look at these names?
I mentioned actually some time ago that IT companies have seen significant run up, post COVID-19 rally. With a lot of optimism of digital business opportunity. While the digital opportunity was for real, and the Indian IT companies did get an opportunity to participate in the digital business. However, as it happens, the over enthusiasm took the valuations beyond the normal. This is a typical cycle. Now we are witnessing the mean reversion. The average PE of the IT companies were in the range of 2024, but it crossed 50, 60. Now it is coming back to that 2024 range, and that is what the pressure we could see. And the reasons could be, coming in terms of demand getting stabilized, or there is an attrition. A lot of things could come in, but it is a mean reversion that we are witnessing in terms of valuations. So we should have a little more patience before we look into this sector.
How would you look at the numbers and commentary coming in from a lot of players? FMCG companies, auto companies have seen like their margins just go down, but they're quite optimistic about margins going ahead. They're quite optimistic about volumes going ahead. How would you read into these numbers and management commentary, especially for the companies that have seen huge margin pressures?
Absolutely. So we are definitely interested in these companies, automobile especially, because it is coming up after a pretty long time. And we have seen a lot of issues coming in, and different issues coming in. The chip shortage were there, the international problems were there, COVID has come in. So a lot of things impacted the sector. It is on the path of revival, we feel. Opportunities are building up over there. There are cost pressure, as you mentioned, but on the other hand, we see that the raw material prices have come down, steel prices have come down. So that is going to help them maintain the margin. There is some price hikes they have taken. Similarly for FMCG, I'm still not very comfortable in terms of valuations, but there can be still some pockets wherein valuations are okay, and there we can look from the investment perspective. But still, I'm not fully convinced about FMCG as a sector from the investment perspective.
Right. When we talk about FMCG companies, some of the companies are innovating. They've had new heads. They've had new rebirth in terms of the products, the sort of marketing that they do. Any such companies you would still start to consider?
Not right now. I would still wait for some more, correction in terms of valuations. Then definitely yes. You rightly mentioned there are some changes which are happening. The new products are getting introduced. But these companies, from the bigger basket perspective, they are more stable in their operations. New product may not immediately bring a lot of profits or revenue, but over a period of time, it could help them build that capability or that market. But from immediate perspective, from the valuations perspective, I would still wait for the investment in FMCG sector.
Got the point, sir. Thank you so much, sir, for taking out time for us. Always good to get perspective from you.